So we continue on our way of making $100 into $2,000, and today I'm going to show you some interesting trades that I recorded during my short trading session. And also it was at the end of the month, so the market was really volatile. You know, risky play isn't really my style. I'm always serious about market analysis and looking for signals, so I usually try to avoid volatile graphs. But I'm also a YouTube content creator, so I decided that this would be a good content. So let's see what we've got.
Life was like a box of chocolates. You never know what you're gonna get.
On the first chart we can see a downtrend, and my subscribers as well as I will see a double impulse pattern here. So let me quickly remind what this pattern is on a 5-minute time frame. We see a strong downward impulse, then consolidation, then another strong downward impulse. All of that indicates that the market is very likely to turn around and go towards the level of consolidation. But how do I know when it's turning around? That's why we need Fibonacci retracement. We find it in our tools and place it on the chart. We put our level 1 at the end of the first impulse and then level 0 at the beginning of it. And here is the turning point. And also these big candlestick shadows indicates the same thing. So we go long for 10 minutes and wait. By the way, you can watch a detailed video about this strategy right here. So our first trade of the day made us a profit, and let's go on. Note this case here. That's the head and shoulders pattern where one shoulder is finishing being formed. So we have our main peak and the two smaller ones on the sides, and all of those have the same level of support as you can see here. If there is no groundbreaking news, the price probably will go down, so we go short for 5 minutes. Because of some news, the market became unpredictable, so I had a quick break before my next step.
A few moments later.
Half an hour later, all is back to normal and I found a good entry point again. Before we start, a volatile market is a market with many levels of support and resistance. And high volatility makes it harder to find the good signals. And as we do remember and always keep in mind, the prices always go from level to another level. And here's the example on a 10-minute time frame. Here we see that the market has reached the lower level of support number 1 and is already going up to the level of resistance. However, on its way there is also moves between those smaller levels. So here the chart reached the resistance level number 2 and it's bouncing down a little. So we have a question: which level of support should I use? Right? I used our second level of support and it turned out that I was wrong, since the market tested this level, this price, and went further down to our third level. If I had had just a few more seconds, I would have made profit. But as we already know, the market turned around and it's going up, so we simply double for the price to go up for another 5 minutes and wait. Upon closing another trade with the help of double impulse pattern and making profit, I decided not to risk and stop since the market got really volatile. So here we are, moving on our way from $100 to $2,000, and we've actually gone through most of it, just a little more left. So follow our activity, write your thoughts and suggestions in the comment section down below. Keep in mind that you can always find the analysis of my trades on my Telegram channel, and also feel free to contact me on any social network if you have any questions. So see you guys in the next video.